We were very clear in terms of what we wanted to achieve. We started to acquire, the best resources that we can in the company. So I think what's at the heart of our, growth story is the diversification of distribution. We needed to, have this under our control. We shouldn't rely on our group or any of our shareholders. $15 million, we have an ISP. We currently have, I think, a provision of 35%. I think as an industry, there are a number of offerings, and at Softlogic Life, we have, I think, probably what is the best.
Sri Lanka experienced negative economic growth during 4 of the last 5 years ending in 2023. However, not all Sri Lankan companies were defined by this crisis-riddled period. In the studio with us is Iftikar Ahmed, who is Managing Director of Softlogic Life Insurance, and we're here to discuss strategies to win, how Softlogic grew market share during a turbulent period. So with us today is Iftikar Ahmed, Managing Director of Softlogic Life Insurance. And the story about Softlogic that we want to talk to you about, Iftikar, is your sort of remarkable growth from being number 5 in the market, which is not a very big place in Sri Lanka's life insurance market. Now you're number 2, right? We want to understand how you did this, right? And you did this during a period of repeated crisis in Sri Lanka. Sri Lanka had Easter attacks, then globally there was COVID, followed by the economic crisis, which still isn't behind us. So when you think back and look at this 5-year period, Iftikar, what did you do right?
First of all, thank you very much for having me here. It's a great pleasure to be here. It's also a pleasure to actually, recite the Softlogic Life story and to bring out the success that we have achieved. Because what we believe in our team, in our leadership team, that what has transpired during these last 5-7 years at Softlogic Life is like something that happens once in every person's career. To
Right.
see, to join an organization, to be a part of a team, and to see that team achieve, fantastic results. Doesn't matter what the environment is, doesn't matter what goes on around you. And like you said, for us to climb 4 big market positions in the space of 5 chaotic years has been, I think, quite remarkable, right? So just to focus on what is it that we were thinking, how is it that we actually brought about this. At the core of this entire performance is basically a team that is determined, that is very passionate about results, and is very results and performance oriented. So at the time that Softlogic invested in this business, I think it was about 8 or 9 years ago, we were very clear in terms of what we wanted to achieve. And we had kind of charted our path, and we started to acquire, the best resources that we can in the company. We brought in a completely new team. It was a very diverse team. We also didn't stick to insurance only, because we felt that would be a fault, because within insurance, people tend to be very happy with what the market is doing, right? If you are doing market growth, everybody's happy, right? So we wanted to break out of that mold, and to that end, we wanted a diversified team, different people who think differently. And so we put together a very unique blend of personalities, and what that did was gave us a thought process to go beyond tradition. Right? If you look at insurance in Sri Lanka historically, what has happened is, I'm talking life insurance here. Life insurance has been predominantly agency related, which means that you have a group of advisors. They go, they meet you, they speak to you a number of times, and they basically sell you an insurance policy. So Softlogic Life actually has one of the best agency teams in the industry, right? A remarkable set of guys led by a remarkable set of people. But what we wanted to do is, whilst we built that team, we also wanted to diversify distribution, right? So whilst we had the agency, we diversified distribution into what we call alternate channels. So whilst agency is a kind of one-on-one customer interaction, our alternate channels focused on groups of customers, groups of people, and their customers would be the banks. So something like a bank assurance channel, the banks as well as the corporates. So with one interaction, they would be getting 100,000, 2,000, 3,000, basically clients. Whereas agencies basically one-on-one, right? Then not only did we do that, we established a third channel, which we call, a micro mobile, a platform channel, where we tied up with Dialog, the largest telco in the country. We are the only life insurer on their platform. And we've also now tied up with the Sri Lanka Post, right, which has 4,000 post offices around the country, where we want to do small ticket insurance, right? Because to collect 50 rupees a month or 100 rupees a month, you can't send an agent, it's not cost effective. So I think what's at the heart of our growth story is the diversification of distribution.
Sure. Right. So when you look at these three channels, the first one is the traditional channel, which all your competitors
Correct.
use, and if you look at the contribution of these three channels, how does the mix work right now?
Absolutely. So I think that is what we want to really focus on. So when we started, obviously it was like a 95-98% contribution by agency. We've now got that down to about 65%, right? So 35% of a growing pot, right? So what we had in 2018 or 2017 has grown 25% every year, right? And out of that, large number, last year we hit 23 billion, right, in terms of revenues. Now about 68% is agency. The balance is coming from other channels. So I think in terms of diversification, that has really helped.
Right. To break an established mold isn't so simple. You make it sound easy. You said, okay, we added these two extra channels, and that's worked for us, right? In a growing market, we are growing faster. Plus, these two channels are contributing. I'm sure it wasn't so simple getting this done, adding these two new channels. How did you manage to do this?
So it's no, absolutely not easy. So I think once again it goes down to the people, right? It goes down to the people. It goes down to the belief. Obviously, people are both positive and negative, right? Because what you would find as resistance would come straight away from the agency channel. Because, whatever dominance that they had, whatever standing that they had in the organization, obviously so I think it was very important to take them along in that journey and say, hey, we are not trying to diminish anything. We are not trying to reduce anything. We want you guys to grow and grow some more, right? And whatever you need for that growth, we will give you. And I think we proved that and we showed that. We demonstrated that. And so I think that is one part of it. The other part of it is I think we kept the products different so that there is no clash or there is no conflict. Because that's another key. Because you can't have two channels going to the same customer. Right? So as long as you avoid conflict in the field, then it's a fairly clear run, right? And the third thing is basically how do you then reach the customer, and to that end you need to have technology, right? So that is also something that we had because we have in-house, IT team, brilliant team. So those guys enabled the connectivity, so to speak, with the corporates, because there you can't be doing one-on-one kind of transactions. So we hooked our systems onto, for example, the bank systems, our credit life, module, which is for housing loans, personal loans. So when a bank officer gets a credit application, we have our app sitting also on their screen. So they just need to tag that, and a policy gets issued on instantaneously up to certain limits, right? With a higher policy, then of course there's underwriting. But straight away, those days there should be a form that has to get filled. The customer has to take the form, send it to the bank sends it to the insurer. Insurer looks at it, issues the policy then goes back to the bank. Now this is within a minute of seconds. The PDF is with the bank in terms of email that has the customer's policy. So we've changed a lot of things like that, which made it easier for these channels to take off, right? Otherwise, just putting the channel itself and expecting it to do what was previously also traditionally done, right, in the kind of manual space, right, would basically not have made it happen. So I think we've combined these elements, and that has brought about the success.
So I'm assuming in the last 6 or 7 years, you spent a lot of time, Iftikar, looking at bottlenecks in these channels that you're trying to open, because I'm sure, just because you had a team, it doesn't work, right? That takes a remarkable kind of application to sort of open very successfully two new channels. Did you at any point feel that, did you question yourself about, is this gut feel that I have about opening these two channels up, am I hallucinating? Is this doable in a market like Sri Lanka?
Yeah. So I think once again, what we kind of told ourselves is everything that we do is not going to work, right? We will make mistakes, and let's be prepared to make mistakes, right? But if we are going to make mistakes, let's make them fast, right? Let's make them fast, let's fail fast, and then let's get on to the other one without actually dwelling on this, so that we keep on pushing forward, we keep on progressing. But somewhere, on the screen, we also need to know where we are headed, and as to whether we are making that progress, or actually are we taking, one step forward, two steps back kind of thing, right? So I think we made sure that we are continuously moving forward, and that momentum basically gave us the confidence, right? Let's take the next one, and the next one, and the next one, right? So to speak. So I think that's basically the way that we've approached it.
As CEO, when you may have had some self-doubt also about, right, about this thing, can we make this work, right? As a leader, how did you approach this? Were you upfront with the team about what you know and what you don't know, or did you have to sort of show a sense of confidence that, behind that you may have sort of have had some doubts, but did you show a sense of confidence? How did you approach this?
Yeah. So Shamit, I don't come from insurance industry, right? My background is banking, right? I was, had about 25 plus years in banking. So my insurance experience is since time Softlogic basically took over, came into insurance, right? So I, in fact, didn't know that there was two categories of insurance called general insurance and life insurance at the time that we acquired this business. So, but I think that was good, right? Because what it did was it enabled me and then also the team and for us as a group to question everything, right? Right? Why not this? Why this? Why can't we do this? Why not this? Because otherwise, if you come with a a mindset that is kind of, let's say, industry driven, you began to accept everything that's going on there, right? So what we did was we questioned everything. Or at least I questioned everything, a lot of it, right? And said, why can't we do it this way? This way, if we do it another way, it's easier. And at every opportunity that we did that, or every junction that we did that, we kept on focusing on the customer. Right? Because at the end of the day, it's the customer and the customer's business that we are trying to actually get here. So if we are unable to get that business, right, then there is no point in trying to do any process or any product if it is not going to actually work. So what we also looked then was, in any new product that we want to do, right, we want to have scale, right? So our benchmark is, can we do ₹1 billion in this product, right? We don't have to do it in year one or year two, but in about maybe 3 years, we need to be hitting that benchmark. I'll give you an example. On the alternate channels, we launched what is called a global, what you call Good Health series, a global health product, which is similar to Bupa, which is in the market. So Bupa is a well-known product, and there have been similar products in the Sri Lankan market. So we launched this, I think, about 4 years ago, right? This year, it is hitting ₹1 billion in terms of revenue. It is the best-selling global health insurance product in the market. So we have actually targeted that niche, right? We've targeted the niche, and we've given them the product that they need. 75% of that is distributed by the brokers, right? So which means that their acceptance on the product to their clients also has done well. And and this product, for example, is 100% reinsured by AXA, which is the international reinsurer. So we don't have any risk on the product, right? For us, basically it's about distribution. So what we done, like when we strategize, we see what is it that we can achieve, right? Can we get critical mass out of this, right? And it's important that in a particular channel that certain products hit that critical mass, because otherwise it doesn't become meaningful. Financial services is a scale business, right? You need to hit scale in whatever you do, right? So, and the other thing that we looked at was in terms of covering lives. So at the time we had agency only, we were covering about maybe 150,000 lives, right? But we've now taken that up to about 1.5 million lives. I think we are the largest insurer in Sri Lanka in terms of the coverage that we achieve in terms of number of people and lives covered.
Sometimes, Iftikar, on when a company sets itself or any organization sets itself on a fast track growth track, right? There are compromises that have to be made. There are compromises with bottom line. There are sometimes compromises on capital. You're just skirting your capital requirements. There are compromises with culture, process, quality of people, etc. How did you deal with this? When you look back, where did you find it most difficult? If these in these areas or other areas, where did you find it most difficult?
When we were getting ready for this journey in insurance, right? So I think somewhere in 2017 or 2018, we looked back, or we planned the financial resources that we needed, and we felt that we needed to have this under our control, that we shouldn't rely on our group or any of our shareholders to actually provide this. And we did two very unique transactions that are unique to Sri Lankan insurance, right? We did a tier 2 subordinated loan where we raised $7.5 million each from Norfund and FinFund. So that was a 5-year basically bullet repayment loan. That's transaction number 1. Transaction number 2 is we did, I think this is the first transaction in South Asia, what is called a financial reinsurance arrangement. Once again, $15 million with Munich Re. Munich Re is our main reinsurer, but they are one of the global top brands in reinsurance. So we raised $30 million just ahead of all this crisis that actually hit, right? I think it was 2018 or something like that when we did, and 2018 or 2019 we did that. And then basically chaos descended with COVID and everything else. So I think those transactions are unique because, as I mentioned, the Munich Re transaction is I think the first one in this part of in South Asia, as far as you know. And when it comes even to the tier 2, for example, I think Norfund has not made any loan to any insurance company in their global book, right, of about $3 billion, something like that. So I think they looked at the unique proposition that we had. They looked at the different ingredients that we had in terms of what we wanted to do, what we want to achieve. They are also very the DFIs like Norfund, FinFund are very interested in the inclusivity part of it, and they saw the number of the increase in the number of lives that we were covering and the way that we were actually doing it. So that is something that even today continues to, they always keep on asking, what else can we do? How much more can we do, kind of thing. So that got us to a point where we had the ammunition now to move forward, right? Then getting back to your question in terms of challenges, right? Because obviously now when we're running at speed, we are kind of on full throttle, right? And you have to be careful of the environment that you're driving in and where you're basically going, right? So I think where things got really tough was last year, right? When the currency, went off 70-80%, inflation went to 70-80%, and as a result of that, we saw, because we are very big on the health insurance space, right? We saw all our costs starting to go up, right? So I think those are the risks that you have when you're, running a business at full strength, right? Because you're not looking to throttle back or and not trying to reduce speed, kind of. And what happens is, when inflation hits and when medical inflation, especially medical costs, start going up, and you go to hospital, a bill that was now previously 100,000 is now 250,000 or 300,000. That's the time that your customer needs you the most, right? That's the time your policyholder needs you the most. So we had to basically stand by those customers, and this actually started with COVID, where we actually paid almost like $1 billion. Actually, we paid 1 billion rupees in terms of COVID claims for 1 year. That was the time that all these different facilities were being opened up. You had to go into one place, they were charging a certain amount of money, the people, and then you had to leave home, all that kind of stuff. Otherwise, you'd end up in a government facility. So we actually were there with our policy holders right throughout. So just to put this in context, so once when you're going at full speed or full pelt, right, you have to watch out for those things that can push you kind of off the rails. But I think what we've done is, we've seen this happening. It happened, it impacts you, then you take action to actually pull it back. So I think we've done that quite successfully. And so 2023 has been a year of kind of stabilization and now that we are seeing the last months or last weeks of 23, we are very confident that we will close the year on a good note and be ready for next year.
When you look back, do you feel you had to make at least some small sacrifice in those key areas of running your business, or do you think you were so well planned that everything was pretty much around expectations?
I'm sure if someone else looks at this, right, they will actually look at it and say, maybe you shouldn't have done this or maybe you shouldn't have done that, right? But see, when we think, we always think, are we going to do this or are we not going to do this, right? And once we make a call, we basically stick with the call, because at the end of the day, there is no point, trying to second guess it. And if we've done anything, we've done it for certain reasons, and we are happy to take the consequences of that and to live with that.
Say the three crises we've had in this period: the Easter Sunday bombings, followed by COVID, and then the economic crisis, right? This would have challenged the entire industry. In a similar way, it challenged you. When you look back, did this in some way, did this crisis make it possible for you to get an edge because you were more nimble, more reactive, more innovative in the environment?
Absolutely, because that's the reason I think why we've jumped 4 places, right? Because if you look at these, I won't bring up names, but the number we were 5. At 4 was Sri Lanka's largest conglomerate in terms of the insurance space. The next one that we overtook was Asia's largest life insurer. And then the other one was Sri Lanka state insurer with 60 years in existence. So these are big companies. We are we are really new compared to all of this. So I think the fact that we were focused, right? That we were focused and we really knew what we wanted to achieve, helped us to focus on that, on the growth that we wanted, on the achievements that we wanted to make. And we just kept at it, basically.
Iftikar, we are probably at the cusp of a turnaround, hopefully, economic turnaround, right? So when you are at your desk, you would probably be thinking, hey, the next 5 years are going to be very different from the last 5 years. In what ways do you think you will have to change to meet that new challenge of the next 5 years?
Yeah, I think we need to be different. Maybe it's not something that we have not thought about previously, but it is perhaps time to action some of those thoughts that were not priority, or which we have now, because we have done the first part, now we need to do the next part and the next part, right? And from that perspective, we need to focus maybe on different areas. See, one thing that has happened in Sri Lanka is, after this whole financial crisis, people have moved out of the country, right? No, all those guys also represent a market to us. Their earnings are like 5 times what they were getting here, right? So we have to find a way from a services and from insurance perspective to see, how do we offer them something that then also brings money back to Sri Lanka, right? That I think is a huge proposition, especially wherever Sri Lankan diaspora is, right? And so we need to focus on that. And we need to also, I think, innovate to some extent, because when it comes to Sri Lanka and when it comes to the different segments, we might need to break down certain products in terms of payment terms, in terms of convenience, in terms of delivery, etc. We might need to change, do a little more in terms of getting things to prospective customers in different ways, right? So I think innovation is going to be key. And with that, now this whole AI ML thing is around. It helps for us to fashion these products in terms of delivering these products, in terms of understanding which segment needs it, or what type of, at what price point, or at which level do they need it. So those things will become easier and easier to do, right? So I think you once again need to sort of draw the canvas and see where this opportunity is, and then pinpoint these things, look to see how obviously you try and do the easier ones first, right? and then you set out a list of priorities and basically go for it.
The life insurance business and its balance sheet is very different to a general insurance
Yes.
business. Most of your assets are your customer assets,
Yes.
right? You have a large portion of customer assets.
We hold it on behalf of our customers for
Yes.
pay their liabilities. Yeah.
Absolutely. So when you're managing this business currently, which areas of your balance sheet or also your income statement, from revenue all the way down to bottom line, and there may be several lines on your balance sheet that you're keeping a sharp eye on, right? In the current climate, which areas do you think will be the most challenging?
At the moment, the most challenging one is basically the cost of acquisition, because as we all know, inflation has impacted the incomes of everyone, right? And taxation has gone up, so people are really they have got used to a certain level of income. So when that is reduced and when things are difficult, so as a result, our staff, our people, our advisors are all impacted. So we've had to give them some, form of income support, whether it's allowances or some kind of income back. So obviously that's a cost to the company, right? So now that cost has basically increased, right? So now we have to see in terms of our next year's planning and beyond, right? How we are not trying to reduce that cost, right? We don't want to reduce that cost, and I think in terms of a mantra, we are, like I said, when we spend something, we think about what we spend. So we obviously looked at it and then spend that. So we spend something to actually gain revenue, right? So we want to actually improve that revenue. So we are constantly looking to see how do we improve that revenue, how do we increase that revenue, so that the cost basically gets taken care of, right? So that's basically what we're looking at. So the two things that have impacted recently is basically on inflation, especially medical health and those claims, the increase, and the cost of basically staff cost, right? Cost of running our staff, our advisors, because it's a people's business, right? So it's basically that cost. So, but I think we're into our 2024 planning cycle. So we've said, look, we've looked after you guys. Now it's your turn, right? You need to go and get the business.
Iftikar Ahmed, this has been a fantastic conversation. Before we get to a close, let me ask you this. You on your balance sheet, you have these liabilities in foreign currency, right? With Munich Re and with the two DFIs, right? How does one manage this risk, exchange rate risk that you carry?
Yeah. So at the moment, the foreign currency liabilities are actually invested in foreign currency assets, right? So there's a match, right? So if there were to be any return of those foreign currency assets in LKR, then we would have to sort of reevaluate the situation. Now, as I mentioned, back in 17-18, at the time that we took on this funding or this basically this let's say assistance, financial assistance, we needed it for a certain period of time, right? So that time was 24-25. That's next year and the year after, by which time we actually wanted for our capital base of our company to get to the point that we are, right? So we are actually in a position to even prepay these liabilities. And our capital adequacy ratio now is at about 350% plus. It will impact our car by maybe about 15-20%. The regulatory is about 120%, right? So we have the buffer. So which means that the reason why we got those funding, or the objective of getting that funding, has been basically met, right? We have achieved what we want to achieve in terms of growth. We've got the growth, we've got the market position, we've got the stability for our company. And so if we have to, repay any of these obligations, we are able to do that. And we have actually got the liquidity also sorted out to be able to do that. So we are ready to move either way.
Just to understand, so you invested these monies in a foreign currency asset, and you borrowed against that asset?
No. So, for example, $15 million, we have an ISB, right? We currently have, I think, a provision of 35%, right, on the foreign currency ISB. I think what will happen is that when there is an agreement between the banks and the government in terms of the whole ISB settlement, that there will be an option for an LKR settlement, like what happened with SLDBs, right? So if that happens, we will actually write back part of this provision. Then we have the LKR, right? We will basically go and prepay the tier 2.
But that's at a very different exchange rate to the one that you would have expected to.
No, so they will prepay it at the current rate. They will settle at the current rate.
Current rate.
SLDBs also got settled at the current
rate. Yeah, right. Fantastic conversation, Iftikar. Is there anything else you want to add to sort of round this off?
Right. So I think so we are in the life and health insurance business. Sri Lanka's penetration is very low, right? Which means that not many of us are actually covered by insurance, especially in times like this, where inflation is high, your resources are limited. It is actually a very good idea to actually take out health insurance, especially, right? So that basically you're covered. So I think if I had to give a message to an audience, I think people need to think about it, right? And need to think about it seriously. And I think as an industry, there are a number of offerings. And at Softlogic Life, we have, I think, probably what is the best.
Iftikar Ahmed, pleasure having you here.
My pleasure as well. Thank you for having me.
අමාරු කාලයක් නේ
අපේ කිසිම ඉතිරියක් නෑ
පොඩ්ඩිට්ටෝගේ අසනීප වුණොත් ඉන්ෂුරන්ස් නම් ඕනෙමයි
ඔව් මේ කාලේ ඉන්ෂුරන්ස් නැතුව බෑ
ලෙඩක් හැදුනොත් නම් කොත්තමල්ලිම තමයි බොන්න වෙන්නේ කියමු ලෙඩ
For the sicknesses you don't want, you've got Sri Lanka's best health insurance, Softlogic Life.